how do you kind of advise people to play Q4, where we go if October suddenly started with a little bit of a tough go? Where do you see the rest of the year go?
I want to believe that there's more demand and organic demand than supply, and that we're still on track for higher highs in Q4. I am concerned that the ripping out of the leverage that occurred on Friday and the destruction of that retail cohort may make that pretty impossible. That's the bad news. The good news will be, since we didn't go to 170, we don't have to fall to 65. So we could now just chop around this level. The one thing that does make me nervous, which is probably going to get me in trouble, but the Trump back whale is back short and even bigger this time. You wouldn't or you shouldn't make that trade unless you have better information.
Today's episode is brought to you by Trustless Media, pioneering the first way to bid, win, and trade ad space as NFTs in your favorite creators. You can bid now to unlock ads just like this in Coinage or other premium creators like The Rollup or Thinking Crypto at a 90% discount. Head to auction.trustless.media to bid on ads today and even get paid if you get outbid. Welcome, everybody, into another episode of Coinage. I'm your host, Zach Guzman, coming to you live from our Brooklyn studios here in New York City, as we are watching the chop continue after Friday's big sell-off and the Sunday/Monday recovery. A lot to dig into, because I think it's pretty clear that crypto is in a new era here after some more unease has been thrown into the market. And who better to have on with us, the legendary investor over at Morgan Creek, excited to be making his Coinage debut today. We got Mark Yusko, Morgan Creek CEO and CIO. Mark, thanks so much for being on, man.
Oh my gosh, so great to be with y'all, and thanks for the invite, and excited to be part of this growing community. And I love you were telling me up front that owned by the listeners, and love that format, and so excited to be here.
Yeah, man, thank you so much. Appreciate that. I think it's been fun as we've been pioneering this. Obviously, a lot more attention right now on the Coinage model, and really, I guess, it's kind of the Bitcoin ethos of value accrual to a network of people, and that is where we're probably going to start here, Mark, because Bitcoin, it's an interesting time, and obviously, a lot of people appreciate your advice and how long you've been in the market here as one of kind of the OGs that has seen the space grow. Just kind of want to get your take. And obviously, we're going to get into Trump. We're going to get into the tariff sell-off. We're going to get into all that, because you and I think, are on the same page, where we're a little uncomfortable, shall we say, about what we're seeing play out. But first, just your take on kind of what you saw in the carnage and where we are now.
So look, I am a self-described OMG, old macro guy, mostly old, right? Gray hair to prove it. And so I just been around a long time, and like Novogratz, and like Dan Moorhead, and like Dan Tapiero, and like John Burbank, and a lot. I mean, we're old, right? We've been around, but we are also ex-macro guys who kind of found our way into the Bitcoin and ultimately broader blockchain-oriented space, and been really looking at this space since 2013. Really got active in 15, 16, and then actually kind of transitioned from what I call my chapter 2 to my chapter 3. Chapter 1, I worked for not-for-profits as an allocator, like at my alma mater, Notre Dame, or down here at North Carolina. Then I ran Morgan Creek Capital Management up until, I still have that, but I now have spent the last 7 years, since 2018, on Morgan Creek Digital as the managing partner. We've made about 100 investments across the venture asset ecosystem. We're large owners of Bitcoin and other assets. So, I come at it from a perspective of technology, and the innovation around technology cycles is the best place to invest. And I will argue, most of us in the allocator world come from the perspective of there are 4 assets: stocks, bonds, currencies, commodities. And you can build a portfolio of those things. And everybody says, oh, wait a minute, what about hedge funds? Yeah, hedge funds own stocks, bonds, currencies, commodities. What about real estate? Well, I own the equity of the deal, I own the debt of the deal, or I own the land, the commodity. What about private equity? Common stock, preferred stock, convertible bond. So It's stocks, bonds, currencies, commodities, but there is a fifth thing, which I will argue is innovation. So innovation as an asset class, like creating new things, whether it was the internet in 96, whether it was the mobile net in 2010, whether it's the truth net today, blockchain technology. So all of that, and Bitcoin is one of those things, right? It is a reinvention of money, right? The famous JP Morgan quote, gold is money, everything else is just credit. That's true, but Bitcoin is better gold, so it's better money, and everything else is still just credit. And so that's an intro to say, well, what about this carnage and the cycle? And look, I'm in the maybe not so vocal minority that believe that the 4-year cycle still exists and that there will be another crypto winter, and it's possible. I'm not saying probable, but it is possible. And I don't want this to be the case, but it is possible that we've already entered into the new crypto winter as of October 6th. So anyway, that
what happened but I kind of want to dig into that too, because that does get us to last Friday, and I just want to bring up the chart too, because whenever you throw around crypto winter on Coinage, people panic. And maybe perhaps rightfully so. And historically, kind of looking at this, we are in a different cycle. So I guess, when you put the pieces together, Mark, one of the key things that I think is always leverage involved, by the way. I mean, we had a front row seat in terms of the Terra collapse here at Coinage with the first interview that Dokwon did after that happened. And this weekend, people are making a lot of connections to what happened with USDE and Athena and the idea of, okay, here we go, we got a synthetic dollar, what happened on Binance when liquidations happened. And so when you put the pieces together, you have that, but then you also have DATs, which are new this cycle. Yeah. And you have some of them, I think it was Metaplanet, or looking at a few other ones that are trading below MNAV. And when you put all those pieces together, is it fair to say that is kind of similar leverage that makes you uneasy with kind of how quickly it can flip?
Look, so the answer is yes. And say you did have a front row seat, and look, I remember it vividly because it was my birthday unpresent.
Oh no.
So, May 9th, 2021, Luna came to Terra. Right? Ha ha ha. And everything crashed. And that began, it didn't trigger immediately, but it began the unwinding of the leverage for that cycle. And look, there's a 4-year cycle for a reason. Well, what is that reason? Well, it's tied to the halving. Well, why? Well, let's just think about it. What is the Bitcoin network? Right? It's a network of computers around the world that donate their compute power in exchange for block rewards. Now, they can also get transaction fees, another story for another day, but the bulk of how they're compensated is block rewards. And Nakamoto built in to this code that the block rewards would get cut in half. Now let's just think about that for a second. If you're operating miners, your costs are kind of fixed. Your electricity costs are fixed. Your rent for the space is fixed. You've already bought the miners and you got a depreciation charge against that. So if the number of block rewards gets cut in half, if the price stays the same, half, arguably, of the miners need to go out of business unless the price adjusts, which is exactly what we've seen in 2009 and again in 2013 and again in 2017 and again I'm sorry, not in 2009, 2013. Sorry, it was founded in 2009, but in 2013, 17, and 21, those 3 cycles, we had a movement of the price to increase so that the block rewards total would match. Well, what that does is it brings in activity, right? and part of this is not politically correct, but guys, right? The male species, we are hunter-gatherers, right? Genetically from way back when. And so given that most of the people in the space happen to be guys. It doesn't mean there aren't women, but most are guys, and particularly traders, vast majority guys. So we're drawn to movement, right? Like if someone were to walk, by my office, I would look, right? My eye follows movement. Like my wife says, go get the ketchup. I go to the fridge, I open it. Honey, there's no ketchup. She says, no, it's right there. If it ain't moving, I can't see it, right?
Yeah.
So that's how it starts. So if you think about the 4-year cycle, after the bear market, so after crypto winter, the price is below the value. Well, what do I mean by that? The value of any network can be determined actually pretty accurately with a Metcalfe's law model. We know the inputs, transactions and nodes and all participants and the wallet sizes. We know all of the fundamentals of this particular network or communications network or a cell phone network. And we can value networks based on Metcalfe's law. So once you know the value, when the price falls below value, because remember, price is not the value of anything. The price is simply what two people agree to sell a small amount. Mm-hmm. And this is one of the things that kills me about crypto broadly, Bitcoin less so, but crypto broadly. Let's just I'll just pick on it, Dogecoin. I could pick on XRP, but the XRP army is like angry. They get angry. So I'll pick on Dogecoin because they don't seem to be quite as angry. So the idea that you take the last 100 Doge traded and then multiply that price times the billions of Doge that exist, and that's your market cap, that's an insane number. Because if Mark Cuban or Elon Musk were to sell one Doge, that price would collapse. It might not go to zero, but it would collapse because the price is not the value, right? The price is just what two people exchange a small amount. Sure. And the same thing applies to XRP or anything where the bulk of the asset is held by a small number of people and there's very little float. Take Oklo stock or Rigetti stock, same phenomenon, right? And short squeezes can happen and all kinds of crazy stuff can happen. But at the end of the day, if the price, so when the price is below fair value, who would buy it? Investors.
Yeah.
That's what investors do. They buy things below fair value, or they buy things at fair value that they think can grow faster. So either a value investor or a growth investor. Okay, fine. So then what happens? The price starts to move up. So we get crypto spring, okay, and we get a little bit of recovery. Well, then as it starts to move and the halving occurs and the price starts to move back towards fair value, okay, then what happens? Well, then the traders come in. Traders, they don't care about value. They just want movement. They could be long, they could be short. So then as we get to fair value, so the price, gets back to fair value. Now what happens is we start to go above fair value. Well, who does that attract? Well, that attracts the speculators. Well, who are the speculators? Well, the speculators are the opposite side of the hedgers. Well, what's a hedger? A hedger in any commodity, whether it's oil or gold or silver or wheat or corn or Bitcoin, remember, is a commodity. The producers, let's say they're drilling barrels of oil, they need to sell the oil to pay their bills. Yeah. So they sell the oil in the futures market and someone has to buy it. That is a speculator. That's the definition of speculator, the opposite side of a hedger. Same thing here. The miners have to sell the Bitcoin to pay their bills. Now they could issue debt too, but many of them sell their Bitcoin and they do it in the futures market. Well, then we can get into the dirty little secret that, well, there's some other people that sell futures, like hedge funds. And I love when people say, oh, Millennium owns 2 billion of Bitcoin. No, they don't. They own 2 billion of IBIT and they're short 2 billion against it because they're a market neutral fund. Mm-hmm. So the problem is that short in the futures market puts artificial down pressure on prices. So the speculators, okay, some of them maybe aren't taking the opposite side of the hedger. Maybe they actually believe that the price is going to change. So they're going to actually speculate. So then the price starts to move above fair value. So in 13, fair value was 10. I'm sorry, in 17, the fair value was 10. We got all the way to 20. Remember, we hit 10 on November 6th, right on schedule. And then we went all the way to 20 by December 18th. Well, what happened on December 18th? Two things. One, futures were introduced for the first time from the CME. And there's a very famous quote from the guy who runs the CME in 2017, which is kind of an interesting quote. He said, "Don't worry, we will tame Bitcoin." Like that's a weird word to use. Well, what do they mean by that? Well, everyone's saying, well, this thing's going to the moon. It's super volatile. It's only going to go up. Well, if you can short it out of thin air in the futures market and create paper Bitcoin, not real Bitcoin, but paper Bitcoin, you actually can tame the price. And it happens in the gold market and the silver market. Now, it can only work for so long because eventually enough buyers come in to cause a short squeeze. And that's what we saw in gold here this year.
Mm-hmm.
And long story short, 2017 into 18, right? We have this peak at 20,000 and then go into a bear market. Okay. Then we come back in 21. In 21, fair value was 30,000. Now remember, when Luna hits Terra, things start to get a little bit ugly. But then the FTX thing happens in November. In November, we were all the way to 69K. Fair value is like 32K. We're 2 times fair value, just like in 2017, we're 2 times fair value. Well, when you're 2 times fair value, what has to happen? You have to go back to fair value. Now, what's the trigger? Deleveraging. And the problem is in both 17 and 21, the leverage was super high. Mm-hmm. And so we went bam, down 84%, 74%. We went through fair value, we got to cheap, and then the investors come back at 15K this cycle. The investors, like us and others, come back, and then we start moving back to fair value. Today, fair value is like 105, 110, Metcalfe's law. So here we are, toward the end of the cycle. I would have said, and I actually did say in January, that I thought there wasn't as much leverage this time as the last 2 times. So we were only going to go to 150 to 170, about 50% premium to fair value, which meant we'd have a lower drop. So then what happens? Well, so then this tweet goes viral last week that, hey, this guy tweeted a couple of years ago that if you look at the math, it was precisely 1,064 days from 2013 to 2017 peak. Then it was precisely 1,064 days from the trough to the next peak. Precisely 1,064 days was October 6th. Mm-hmm. And it's based on number of blocks and all that kind of stuff. So it's like, whoa, that's going to be the peak? Like clockwork, 125.6. 4 days later, we get this leverage unwind. Well, wait a second. Now, if we're not going to go all the way to 150 or 170, well, we certainly don't need as big a drop. But we're at 125. If we drop down to fair values, like right where we are, 105, 110, are we just going to be like dead money for a while? Mm-hmm. I don't know. And now, on the flip side, and you didn't ask me this question, but I'll volunteer it. So on the flip side, there are
I haven't asked any question. I want to let you cook, Mark. I'm just listening, and it's all good. So I'm not going to jump in.
On the flip side, there are people who say, no, you're wrong. The cycle is over. Well, why do you say that? Oh, ETF demand, nation state demand, retail demand. Morgan Stanley is saying yes. Vanguard saying yes. Okay. There's some logic to that the institutionalization of the asset will mitigate the volatility of the cycle. Okay, I'll buy that. But here's the problem. We've had this wave of interest that's been promised, and we actually have seen a lot of money come in through the ETFs, for sure.
Yeah.
But as I said, the problem with a lot of that money, it's not net long. It's actually short the other side. It's just an arbitrage because there is, in the futures market, the future price a month out is higher than the current price. That's just the nature of futures markets. And so there's something called roll yield, where you go long the future and short the asset, and you roll down over the course of the month, and you make, in a good time, 11-ish% annualized, in a bad time, 4 or 5% annualized. But the thing about it is, it's pretty much risk-free because you're dollar neutral. So you can lever that up a decent amount. And if you're making 11% for a month, 11% annualized, but you can lever that up 5, 6, 7, 8, 10 times if you're a big institution.
Yeah. And we've seen that a few times over this year. I feel like we've seen that a few times, or this year, last year, we've seen kind of the leverage build up in that trade and then come unwind whenever. And I think this is a good place to kind of pair the dots is, we've seen this unwind the last time Trump started talking about tariffs. And then lo and behold, this is kind of the trigger that you're getting to, I think. And it is kind of interesting to pair all these dots because certainly it can be one of two things. It can be both math and exactly the amount of days that you just talked about getting us to here and now. But then it can also, I think this is the other interesting flip side of that. And I want to quote your protege, Palm, because he was tweeting today kind of a little bit about, hey, if everyone expects a crash, it ain't going to be a crash. And I think that that's kind of interesting when you start to pair, and maybe it's fair to say, Mark, that certainly the market is still waking up. I was just at a dinner a couple nights ago. People were like, hey, how the hell does Bitcoin work? And so I think that there's still a lot of learning to be done. So I'm not going to say that the whole market is already there. But how do you kind of square those things? If it is just math, more and more people, I'm sure, as the Wall Streetification of Bitcoin happens, more smart people with money, certainly Larry Fink, I throw him in that camp, understands kind of how this stuff works now. And so you would expect the market to start to wake up to some of that. So how do you square those points? And how do you get to exactly?
Great. It's great. And look, and I love Pomp. Pomp is part of the reason I got here and we started Morgan Creek Digital together. And it's funny, Pomp, the way we came together actually is he was on a podcast. He was on Patrick O'Shaughnessy's Invest Like the Best. And it was one of the shortest ever. It was only like 26 minutes long. But as I'm listening to it, I'm like, that's interesting. That sounds like something I would say. Right? That is something I would say. I got to meet this guy. So we met, and we met for breakfast. He was down here in Raleigh, and I'm in Chapel Hill. And we met for breakfast, and breakfast turned into lunch, turned into dinner. Breakfast the next day. So we didn't sleep together, but yeah, we were together a lot. And over the next 2 or 3 days, and then we decided to work together, and with Jason, we formed Morgan Creek Digital, and we've had some nice success, and that was fun, but. What Pomp's talking about there is absolutely true. And that's why Uptober isn't happening. Everyone, and I mean everyone, was saying, hey, all we can do is get through, Rectember, and Uptober will be great. Well, when everybody believes something, it usually doesn't happen. And it can be exploited by whales, which is what we saw, this whale that went short on Friday. 1 minute before the announcement, I'm just be a betting person that there was some correlation of knowledge there, but whatever. So, but my point there is that Pomp's right. If everyone's projecting a crash, it probably isn't going to happen, but that's not what everybody's projecting. Everyone, and I do mean everyone, has jumped on this bandwagon of, oh, it's different this time. The 4-year cycle's over. We've institutionalized. There's too much demand, not enough supply. And it's true. We don't have enough supply of what's mined every day. But there's plenty of supply. There's plenty of people with basically no cost basis. Like literally the person who bought drugs on Silk Road, they got some Bitcoin in an account, they forgot about it, and now they worth millions and millions of dollars. Or the person who intentionally went out and risked a wrench attack to buy Bitcoin at $50. I remember, a good buddy of mine, a hedge fund guy, literally did this. I mean, this is a guy who was already, a centimillionaire, literally met a guy in the back alley. Like, dude, this is a bad idea. This is a bad idea. Now, it worked out great, and he's made, $1 billion plus, but it was a bad idea. Or you could be, Tim Draper, who, this is one of my favorite stories ever, right? Tim was not really a Bitcoiner, and he's a great venture capitalist, 3rd generation. His kids are 4th generation. His dad was a famous, venture capitalist. His grandfather wrote the Marshall Plan, was a venture capitalist. I mean, amazing family. And Tim is amazing. And he had this client from South Korea, and he said, my son came to me the other day and says, Dad, I need $40. He's like, what do you need $40 for? So I want to buy a sword. He's like, your mother is never going to let you have a sword. He said, no, not a real sword, Dad. I want a sword for my game. He said, I'm not giving you real won to buy a sword. And Tim was like, you're going to give him real money to buy something virtually? I should look into this. So he looks into it, and he's like, hey, this Bitcoin thing. And that was right when they had seized the Silk Road assets. FBI's auction, or FBI, I think, FBI's auctioning them off. The price was $600. Everyone was trying to steal them for $300.
Yeah.
And Tim bid 601 and got them all.
Yeah, I remember. It was not too long ago. I interviewed Tim Draper at the Bitcoin conference in Miami. That was back, by the way. It's interesting. You remember that push around green or like energy neutral Bitcoin?
Oh, yeah.
That Kevin O'Leary was pushing like green Bitcoin. I was interviewing Tim Draper. I got to pull this clip too. If we post this afterwards, I got to pull the clip because he heard me wrong, and I asked him exactly about that. And I was like, "How crazy is it that you've got Kevin O'Leary talking about dirty Bitcoins?" And I think he assumed I was talking about the Bitcoin he bought through the Silk Road. And he's like, I bought that from the U.S. government. It was a hilarious mix-up. So if you see Tim, let him know. Let him know I never insinuated that. But I do think it is interesting to think about now where we are. And you're getting to the point that I think a lot of people, myself included, by the way, I've just been thinking a lot. And I know you have, Mark, because I've been looking at your tweets. And I do want to bring up kind of that tweet that you just mentioned around the sell-off and who timed this, because I think it is true what you've been talking about. It was certainly we've been covering it here with Trump's World Liberty Financial, the idea of USD1 and this oligarchy crypto thing. In fact, if I may go back to it, I might pull it up, but I was tweeting about this in January when he launched his meme coins as well. And it just seems weird. I don't know if you're in this camp too, where it's like, okay, Bitcoin was all about, you don't need the government, and it's all about everyone else kind of doing their own thing together. And now it just seems like it's DC insiders doing things like this, where they get a tip off. And I'm not saying, you might not be comfortable saying it, but I can also bring up this other chart. This is World Liberty Financial that had a little bit of a dip right before the big sell-off that hit everything else. So you compare these dots.
Look, I mean,
what do you make of it?
Look, we've been living, we talked about this before we went on air. We've been living in a kleptocracy for a very long time. And it goes back to the Thomas Jefferson quote that if being a government official ever became a career, corruption would soon follow. And whether it's, the Clinton Foundation, like, well, who donates to the Clinton Foundation? Oh, nation states like Saudi Arabia. Well, why would they do that? Well, because they want favors from the Secretary of State. So yeah, Bill's no longer president, but Hillary had a pretty high up position. And so there's all kinds of grift and graft and corruption that's going on. And people say, you shouldn't say that about, the seated president. So it's funny. I was talking about this a couple years ago during the FTX scandal. Cause I have some receipts on how tightly linked SBF and his parents are to the Democratic Party. And, his mom runs a big Tumblr for big donors. So I'm not saying anything but I was doing this and I'm actually sitting in the same chair, and suddenly the power in our building went out. And the guys and the guys on the air were like, oh my God, did the black hats come get him? And no, they didn't. So I'm still around. But look, I don't think it's anything like super intelligent to say that the current administration is profiting handsomely through some family entities on their flip-flopping on trade policy. I actually don't. I don't think that's
to me
really
the idea of doing it. The idea to me of announcing what Trump announced on a late Friday before Columbus Day. The idea of what timing went into it. I think he's smart enough to know what's going to happen there with low liquidity.
Oh, come on! I mean, look, the Kobayashi letter. Great follow on Twitter if you're not following them. But they wrote out there are 8 specific steps that have happened now 5 times, not once or twice, 5 times, like 8 specific steps.
Yeah.
Okay. Trump says this, then this happens. Then Trump says this, then this happens. Then Trump says this, then this happens. All the way down to the timing. Like it's always on a Friday. Then it's always the initial walk back on Saturday morning. Then it's the full walk back on Sunday night. Well, why is it always Fridays and Sundays? Every big announcement is always on Sunday. Remember the global financial crisis? Bear Stearns, Washington Mutual. They weren't taken over on Monday or Tuesday. The announcement was made on Sunday when the markets are closed. Well, why? Well, there's something called the Council on Economic Stability, and it's made up by the Secretary of the Treasury, the head of the Fed, and the head of the 4 biggest banks: Goldman Sachs, Morgan Stanley, Citi, and JP Morgan. And they meet every Sunday at whatever time in the evening. And not shockingly, then every announcement happened on Sunday night when the markets are closed. So the only people that benefit are the people who were already positioned. So if you remember, Bear Stearns closed on Friday at $2. And on Monday, it was sold to JP Morgan. And it always ends up at JP Morgan, right? Washington Mutual, same thing.
Yeah.
Well, who can position themselves? And here's a crazy stat. Over the last 5 years, 100% of the gains of the US stock market have occurred when the market is closed, between 4 o'clock and 9:30 the next day. Mm-hmm. None of the gains happen during the day. So all these investors trying to make money, it's just chop. All the money is made by the insiders who know what's going to happen. And so
I wonder too, I mean, I want to pair that too with what we're seeing play out in kind of the new hot trend, which is also DATs, because you could put DATs in that camp as well, I think, which is interesting because there's a lot of people making a lot of money through the pipes in the pop, and we're seeing that kind of disintegrate in real time because obviously the premium to NAV has come down.
It is, and look, I am a board member of a couple of them, and it has been painful. And what's really painful, take Metaplanet. Metaplanet didn't do a pipe. They did it the old-fashioned way. They started with a little teeny tiny microcap company and built a juggernaut. I mean, Simon is an amazing CEO, but they're being tarred and feathered by the pipe. Well, I shouldn't say they didn't do a pipe. They didn't do a pipe to start. They did do an international offering, a form of a pipe recently, and they're getting punished for it. And Naka, again, board member there, so I can't say a lot, but they're being punished for the pipe unlock. Pomp did his deal. He hasn't unlocked. He hasn't closed yet, so we'll see what happens. But Asset did it. Strive, they did the acquisition of Semler for stock, and on the day they did it, everyone's like, "Oh, they paid this huge premium." Like, no, they didn't. That pipe is going to $1. I mean, their stock's going to $1, which is exactly where it is, maybe even lower now. And so, what appears like financial engineering and is just not. It's, to your point, Wall Street insiders are playing the game that they've always played. So if you lend somebody convertible debt, you will short the stock against it. That's just the way it works. Ken Griffin made his first, hundreds of millions that way, and he became a billionaire from now controlling, 25% of all the trading every day. Mm-hmm. Like, I always ask myself, who would actually borrow stock from Ken Griffin? Like, why would you do that? I mean, you're just going to get squeezed. I mean, so, but look, Citadel Securities is one of the most profitable businesses on the planet. And Ken, look, he's one of the 5 smartest people I've ever met. I mean, I'm super lucky. I mean, for 20 plus years, I had the best job ever. I got paid to talk to the smartest people in the world. Like, literally go around the world, find the smartest people, talk to them, and maybe give them capital. And so I got to talk to, literally every living legend in the investment business, from Nobel laureates to, and I said, Ken he might be the smartest person I've ever met. I mean, the guy is just, I just say he's a better lawyer than his general counsel. He's a better trader than all his traders. He's a better tech guy than his, CTO. He's a better everything
Yeah.
than
Well,
everyone.
he also beat out the Constitution DAO folks for that replica Constitution too. Let's not forget that histote as well. He's a better
Well,
bidder on things
he's
like that
just
too. He's
he's just good
everywhere.
at everything. No, he's good
He's
at everything.
everywhere.
But back to what we're talking about here, which is, look, is there manipulation going on in markets all the time? Whether it's spoofing gold, whether it's controlling, pump and dump schemes. Look what's happening in this quantum space.
Well, hold on.
That
Before we get into
is,
the quantum space, because I think that this is I know we only got like a few minutes left here, because I
I
do
know.
want to ask about that piece, because to me, in pairing what you said, it becomes very tricky for people to really understand where fair value is, and that's just Bitcoin. But let's put it aside, because look at what happened over the weekend. You had a lot of alts liquidated, or huge moves to the downside. I think like Avalanche
no
was down 50%.
liquidated, and look, that is a just like SBF and FTX was not a crypto problem, was not a Bitcoin problem, was not a digital asset problem. It was bad people doing bad stuff problem.
Sure.
Right? They stole money, okay, gave it to political parties, and then lied about it and made it up. So that's just bad people doing bad stuff. And that's been going on forever. And so the same thing is true here in the sense that fair value is one thing, but what happened on Friday was not about fair value. That was about a systematic destruction of an order book, right?
Mm-hmm.
Because of low float and because of the way algorithmic trading works and the way leverage trading works. And look, I shouldn't rat out my family member, but I have a family member, let's just say, I won't say which one, but I have a family member. And they called me up during the 2020 crash, where things crashed. He says, they stole my Bitcoin. I'm like, what? He says, Bitfinex. I'm like, stop talking. You're the idiot that levered an 80 vol asset and you didn't make the margin call. And yes, they seized your collateral. That is not stealing your Bitcoin. Now, to be fair to him, if the business model of the business is to entice people to take ill-advised leverage positions and then seize their Bitcoin by manipulating the order book, maybe it is theft. And
Yeah.
I probably shouldn't say that about a firm, but maybe it is. And so what happened on Friday was the largest transfer of wealth we may have seen since the industry started. Bad people doing bad stuff, but that's not a crypto problem. That's a market structure problem.
Yes,
and
that's exactly right. I think that's a very well said thing, because to me, that is a problem when it becomes, okay, if it's a market infrastructure problem in crypto, then there's a chilling effect that might happen in terms of, retail. Certainly, a lot of people lost a lot of money, and it was mostly retail traders, I think, and you can put them in a camp. But then there's also institutions who are watching this play out and say, I'm not so sure about this crypto thing anymore because they got shenanigans like that happening.
100%. And that, look, to that point, we had a group, big pension out of Europe, that before the Terra Luna thing had committed to us 40 to 80. They hadn't given us a final number, but 40 to 80 million dollars for our fund. When the Luna collapse happens, they're like, we're going to split it with you and another firm. So I'm now 20 to 40. Then when FTX happened, they're like, 0, we're out.
Mm-hmm.
Now, I went back to them last year and I said, all right, look, you missed maybe the worst vintage for venture capital in recent memory. Keith Raboy, famous venture capitalist, now he's with Open Door and other stuff. But he tweeted in November of 21, yes, we've all lost our minds. We're all overpaying for deals. And someone needs to come to their senses, but you go first. You skip this hot deal because you think the valuation's bad. And oh, by the way, I'm going to take your capacity. So we had all lost our minds so I said to them, look, you missed that. So that's going to be a bad vintage. You missed it, but you still have 0. You need to get off 0. And they're like, the board won't even let us talk about it now.
Yeah.
And I think that's going to happen in spades here, because what they're going to read was this was a crypto problem. This was a Bitcoin problem. This was an ETH problem. No, it wasn't. This was
Well,
bad people doing bad stuff.
I think that's the problem, though, because I also want to ask you one question, because I know we are running out of time, because this, to me, just to go full circle, is one of the hottest questions right now is, I'll just bring it up too, is the dislocation that happened on USDE, on Athena, because that happened on Binance's book.
Yeah.
And because they did that, it liquidated a lot of positions. But the alternative here, which I don't know, I'd love to get your take on this too, is Aave was like, hey, we're just going to hard code USDE to $1. And that, to me, also seems very dangerous.
Both are super dangerous. And look, I don't have all the facts on this because I haven't really dug in the way you guys have, and that's the nature of investigative journalism. It's why it's such a great thing, and we need more of it. Look, I do struggle with. There's just too much centralized power in a small number of institutions in most markets. It's not just crypto markets. Mm-hmm. And in this case, the rumor, and again, I don't want to spread the rumor, but it is out there, right? Is CZ, is trying to put Wintermute out of business. Okay, that's one. You could make a logical, cogent argument for that. I'm not saying that is what happened, and I'm not saying that that's real. And look, there are lots of interconnections between, Binance and other institutions. And so I think part of the challenge, it's like Bitmain and WhatsMiner control 92% of the hash power. Mm-hmm. That's probably problematic. I'm not accusing anybody of anything. I'm not saying there's any backdoors or any tracking, but 92% is probably ill-advised.
Especially for a thing that's supposed to be so decentralized in the sense.
Yeah. So that's probably ill-advised. And 80-ish, I don't know what the number is, percent of trading going on in Binance, and it's a lot of different Binance entities that have been rolled up, is probably problematic. So, but it's really not different than any early stage market, mm-hmm. right? Think about the New York Stock Exchange when it was literally at the buttonwood tree. It was a very small group of people that met physically around the buttonwood tree and traded analog assets. And then they're like, this is really not safe because those guys in the tall hats, if you've watched, Gangs of New York, could steal our stuff. So let's move inside and let's electronify and let's have QSIPs and bank statements and we'll trade those better. But it was still dominated by a small group of, one of my favorite stories.
How do you put that together though? Because if you're listening to this, I'm sure there are a lot of people who are maybe still licking their wounds from maybe what happened this weekend, saying, Mark's right. There's a lot of shenanigans here, and I want to continue investing in the space, but I'm not so sure anymore. How do you square what you said around fair value and where we go?
If you give up control of your asset,
yes,
right? If you have to pledge your asset to a lender, to an exchange,
don't do it.
Don't do
You're
it.
Cooked.
And
You're cooked.
But I want a lever. Fine. Separate the decisions. Take a loan from somebody who you don't have to pledge your Bitcoin to. Take a HELOC. Take a student loan. And I'm not saying to do this, but what I'm saying is if you connect the two and you've lost control, the person who has control, mm-hmm. not necessarily because they're a bad person. They could be a bad person, but if they're a bad person, then bad things will happen. But even if they're not a bad person, if they have control, they're going to execute, right? Now, we have an investment in a lending company. They didn't seize anyone's collateral. They called people up and said, hey, if you post some more collateral, we're good. Yeah. And everybody posted more collateral and they have a small number of clients, so they were able to do that. And it's the same thing, that BlockFi. BlockFi was a victim in the whole thing. And, I wish Zach all the best with what he's doing with Galaxy. And they did the same thing in 2020, right? Not one person had their collateral seized. Not one. They could have seized it all, but they didn't seize any of it. And so it depends who you're working with. But if you're working with somebody who the moment you're one penny below, they take it,
Well, just I guess in terms of now playing this out, because I want to square points, and then I know you got to jump. But I think in terms of the idea of where we go from here, if fair value is around where we're trading, and you got people saying, "Look, I don't think it's over yet," and I don't even think you're in that camp. How do you kind of advise people to play Q4? Where we go if October suddenly started with a little bit of a tough go? Where do you see the rest of the year go?
Look, I want to believe that there's more demand and organic demand than supply, and that we're still on track for higher highs in Q4. I am concerned that the ripping out of the leverage that occurred on Friday and the destruction of that retail cohort may make that pretty impossible. Now, that's the bad news. The good news will be, since we didn't go to 170, we don't have to fall to 65. So we could now just chop around this level, and money devaluation, dollar devaluation is going to continue at about 6 or 7%. And so we should just steadily accrete. And so then it's just about a DCA, right? Just buy some, and you buy some today, buy some next week, buy some next month, buy some 6 months from now. And I think that's more boring, and people aren't going to like that, because it's a number go up, but it's not a big number, right?
Yeah,
and
that's all right.
And so I probably fall in that category. The one thing, and I'll leave you with this, the one thing that does make me nervous, and I actually tweeted Pomp and Jason about this earlier, texted Pomp and Jason about this earlier today. It does make me nervous that, as I affectionately call it, the Trump back whale, which is probably going to get me in trouble, but the Trump back whale is back short, and even bigger this time. You wouldn't, or you shouldn't, make that trade unless you have better information, unless it's a market neutral trade, right? If they're long someplace else and they're short against it and they're just arbing the spread, which it absolutely could be.
Yeah.
And that I haven't dug into, but
that's one of my biggest problems with Hyperliquid and the way that people report on it is, like, you never really see. It's just one wallet, and you don't know who controls that wallet or what other wallets they might control. So it's really different.
No, it's so great. It's like when people look at 13Fs, right?
Yeah.
The 13Fs, like the hedge fund guys, they're long Cisco. I'm like, you realize they don't have to report their shorts, so they could be short, 17 tech stocks against it and be net short, and they don't have to report their derivative position, so they could have calls written, right? So they could be even more short, or they could be, writing puts, and they could be super long. So if you're looking at one piece of information, don't assume you know everything.
Yeah, and don't borrow stocks from Ken Griffin, and don't bet against the Trump back whale. I think is a good place to leave this one.
That's what I'm saying right now. Is that's kind of what I'm saying.
Similarly, also what we said yesterday on our Monday show as well. So we'll leave it there. Mark Yusko, can't thank you enough for coming on, man. That was great. We got to have you back on soon.
We'll do it again soon, and we'll do it live sometime when I'm up in New York. And really appreciate the invite.
Very good. Thank you so much for the time, sir. Appreciate it as always. Our appreciation, our thanks to Mark Yusko, Morgan Creek CEO and CIO, joining us there on Coinage. We might as well just continue to run this a little bit, Texas. We might as well juice it up a bit, because I think what we just heard there, I've never met Ken Griffin, so I can't say. I don't know if he's the smartest person I would ever meet if I were to meet him. But there, information from Mark Yusko, perhaps some of the best we've heard on the show, and confirms what we were talking about on Monday's show that we do every week, talking about, would you really want to short the guy who just timed the trade of a lifetime in terms of shorting the market right before Trump sent the tariff tweet that sent everything collapsing? Like, I don't know. Good luck if you want to bet against that guy. And also, we do not know what other trades he has on, or she, as the case may be. So I think there's still important things to trade through here as we continue to track all the updates on tariffs and what we're hearing out of DC. But that was fascinating. That was a good chat. I don't think Mark's still on, but I'm sure maybe if he's going to listen to this in the replay, Phenomenal stuff from Mark Yusko. If you're new here, if you're just tuning in because you follow Mark, thank you for watching. Maybe I'll plug Coinage here a little bit because there's certainly more time left, Texas, in the day. Because we're definitely going to be clipping some of that stuff and throwing it on our Zora page. I'll tell you that much right now. And of course, this is a big week for us here at Coinage, not only because we are continuing to see a surge in pricing over here on Zora in terms of our creator coin. If you've been a longtime Coinage viewer, you would have seen that we launched this bad boy a couple months ago, back when it was trading around, $70,000. And now, right there, you can see 7.8 mil on the creator coin. And certainly, as Mark has said, can we trust any of these market caps in terms of creator coins? Well, let me tell you that much, because Coinage is owned by a DAO. It's owned by all the NFT holders that we have, including, as you saw there, one of our minters, Mark Randolph, the co-founder of Netflix, myself, and everyone else who owns Coinage NFTs, who have gone to Coinage.media to mint and become a co-owner of Coinage, co-op members in our DAO. I think it's a very exciting time. Not only because, number go up, as we just showed there, but because this week we've got big guests on the show. Mark is going to be coming on. We're going to be chatting the revolution that is occurring right now in Web3 content and media. Excited to have him on the show next week. But on Thursday, big announcement still to come. Jesse Pollock, you may know him if you're in the base community. He'll be coming on Coinage. So I got to tease that interview coming up on Thursday, as well as big announcements still to come. So I want to thank everybody who is hopping in, experimenting with Zora, experimenting with creator coins, scooping up Coinage, and those of our members who have been here, over the last 3 years. Shout out to all the NFT holders that exist in our community. And if you want to join us, as always, you can head to Coinage.media to learn more and become a co-owner in the first community-owned media outlet built on-chain, owned by all of us together. Juntos, as they say in Spanish, Texas, as we know. Bilingual community we have on our hands here. The gifted members of Coinage. All right, that's going to do it for us. Our thanks to Mark Yusko for joining us and sharing a little bit more info on the right way to play things into year end. Good luck out there to everybody still at the table. Of course, if you are, it's helpful to have a friend and community there alongside with you, telling you when to hit or maybe stay, what the dealer's doing. For everybody here at Coinage, I'm Zach Guzman. It's good to see you. We'll see you again soon. Thanks again for tuning in.